Welcome back to the Versus series, where today we are going to be crowning the best dividend, cable, and satellite stock in the U.S. stock market. So these stocks are not only going to be in the same sector, but they're also going to be in the same industry and even the same sub-industry. The winner will be the stock with the most points out of 10 possible points and revealed at the end of the episode. If this type of content is for you, please make sure you guys are liking the video and also subscribe to the channel for more dividend-related content. Now let's quickly take a look at the criteria that I'm going to be judging these stocks by. In an effort to keep the video as short as possible, I'm going to put the criteria on the screen right here. Feel free to pause the video if you guys want to write any of this down or take note of what the criteria is. But without further ado, let's get right into it. So the two stocks we're going to be looking at today are Cable One, stock ticker CABO, and Comcast, stock ticker CMCSA. They are both in the cable and satellite sub-industry that is within the media industry that is all a part of the communication services sector. Let's shuffle these companies up and see who comes out on top. First thing that we're going to take a look at is the market cap. You guys will see here that Company A has a market cap of $7.37 billion, while Company B has a market cap of $180.1 billion. And here you guys will see the visual representation of the market cap. You guys can see that Company B is significantly bigger than Company A, but again, there are no points rewarded for this. This is just an FYI. The first category that does get points is growth. And you guys will see here, Company A has a revenue year-over-year growth of 25.72%, while Company B has a revenue year-over-year growth of 15.39%, giving the point to Company A. And Company A has a revenue 3-year CAGR of 15.94%, and Company B has that revenue 3-year CAGR of 6.83%, again, giving another point to Company B, bringing the total score after the growth section of 2 points for Company A, 0 points for Company B. Next up is profitability. And for profitability, we look at the gross profit margin. So here for Company A, the gross profit margin is 72.02%, and Company B has a gross profit margin of 66.64%. The higher gross profit margin wins, giving the point to Company A, and bringing your score of 3 points for Company A, 0 points for Company B. Next category we're going to be taking a look at is the momentum, specifically the percentage off of the 52-week high. So you guys can see here, the 52-week high for Company A is $2,136.14 with a current price of $1,168.70, bringing them 45% off of their all-time high. While Company B has a 52-week high of $61.80 with a current price of $37.83, bringing them 39% off of their all-time high. Since Company A is further off their all-time high, they get the point here, being the bigger discount, and bringing your score of 4 points for Company A, 0 points for Company B. So we have 6 points up for grabs in the last category. That last category being, of course, dividends. You guys will see here that Company A has a forward dividend yield of 0.89%, while Company B has a forward dividend yield of 2.69%, giving the point to Company B. We have a forward annual payout of $11 for Company A and a forward annual payout of $1.08 for Company B. We have a payout ratio of 21.55% for Company A and a payout ratio of 30.54% for Company B, giving the point to Company A. We have a 1-year dividend growth rate of 10.53% for Company A and a 1-year dividend growth rate of 8.7% for Company B, point for Company A. We have a 5-year dividend growth rate of 11.84% for Company A and a 5-year dividend growth rate of 12.7% for Company B, giving the point to Company B. And Company A does not have a 10-year dividend growth rate, which means they haven't been growing their dividend for 10 years in a row. But Company B does, and they have a 16.09% 10-year dividend growth rate, which is very impressive, and giving them the point. So if you guys have been keeping up with the score, the winner of the episode is Company A with a score of 7 points to 3. And the moment you guys have all been waiting for, Company A is Cable One, stock ticker CABO. So again, and as a reminder, all of this information is based on the metrics I chose to view these stocks by and the time I completed my research, which was 2:04 p.m. Central Standard Time on June 16th, 2022. But with that being said, CABO was the best dividend, cable, and satellite stock in the market. So if you guys are looking to add one of those stocks to your list, this might be a good place to start. And just a heads up, I'm going to be uploading the last of the media industry stock matchups next week. So we're really shaping up this bracket, and then we'll eventually be able to find out who is the best dividend stock in the communication services sector. If you guys aren't really that interested in the granular breakdown, going down into the industry and even the sub-industry within each sector, let me know down in the comments. What I can do is I can just find that information out for you guys and just give you guys the champion of each sector if you guys are more interested in that. Well, that's going to wrap it up for today's video. Please remember to smash that like button if you guys enjoyed today's content. And also don't forget to subscribe for new dividend related content every Monday and Friday. Don't forget to comment down below. Let me know if you have either of these stocks. I personally never heard of Cable One until I did this research. So it was really surprising to me that Cable One was actually better than Comcast, which is a well-known company across the world. But until next time, see you.